This Ag Vision program is made possible through the generous support of Syngenta Seeds NK brand. The results you need, the freedom to choose. And by Farms.com. Ag news, market prices, ag careers, and farm real estate. You'll find it all at Farms.com. Welcome back to the program. Now to our top manager team, who will respond to this question from a farmer. I am a cash cropper. The typical strategy to improve or maintain profits has been to increase yields. Moving forward, is this a viable strategy?
I think historically farmers have looked at getting more yield or growing as the two silver bullets for success. But as we analyze financial performance, we're finding more and more that we've got about all the milk out of that cow we can get many times, and that our real opportunities for improving profit are more on the cost management side. In the classes that I teach, I ask farmers to tell me which that would do more good, a 10% growth in your business or a 10% reduction in your cost of production. And many assume that the advantages of lower overhead cost per unit and some of these things from growth would be just as good as lowering your efficiencies and your operating costs. The fact of the matter is that looking at some case studies, you can get twice the increase in return on equity by having a 10% reduction in cost of production that you could by expanding your business or growing 10%. Once people see these numbers, they really get their attention. And we have numerous opportunities for improving profit through things like transitioning from intensive to no-till, sharing equipment, evaluating overhead costs and better matching the amount of overhead that our farms can provide, and realizing sometimes where we need to seek off-farm employment or share more resources. These are untapped solutions that more and more farmers are realizing they've got to look at to be financially viable and to improve profits.
That's very interesting. Over the last 20 years, we've seen the North American farm industry, or agricultural industry, farmers produce tremendous increases in yield. If I take corn for an example, since the mid-1990s, we've seen corn yields in the United States, in North America in general, but let's look at the United States, the big corn producer, go from about 110 bushels an acre average to well above 140, 145, closer to 150 bushels an acre average. That's a tremendous increase in yield. During the same period of time, we've seen corn prices, especially in the last few years, hit some of the lowest levels we've hit in a long time. I like to emphasize that the result or the conclusion that people like me arrive at is that strictly producing more, focusing on yield and strictly producing more on its own will not result in better financial performance. Our experience is that while we have to keep our eyes on the yield ball, on the production ball, and produce well or productively, we also have to focus on how we sell our outputs. Develop a plan, as we've always starts with that. Have a plan, and then look at the environment. We have to remember that we're in an environment of increasing volatility. We see prices going up and down in big swings. Therefore, simply focusing on yield and trying to produce more, as we've already seen in the past, is probably not going to be enough to get us to superior performance over time. We think it's critical that while we do that, we also focus on selling better, on marketing better, particularly because of the volatile environment, the up and down swings that we currently see in our markets.
Well, traditionally, increasing yields, whether it's a crop basis or a livestock operation, has been the fundamental way. A lot of research, universities and federal government ag research stations have been focusing on increasing yield. And I think my answer is this is not the way to go ahead in the future, just by looking at yield. The more important thing to focus on, because yield is focusing on production, there needs to be a corresponding or an even more focus being put on marketing. Often I hear the question in Western Canada, farmers say, well, I'm not sure I'm going to make any money growing this, but I'm going to do it anyway. Well, that from a business point of view, that really doesn't make sense. If you're going to go after yield, make sure you have a market. Now, the aspect of yield, I don't want to leave yield alone. It is critical. But there again, what we found from talking to top farmers, when they talk about maximum yield per acre or yield from their livestock herd, what they're looking at is the highest return per dollar invested. And so again, on a cropping example, top farmers, when they look at maximizing yield, it won't necessarily be bushels per acre, but it's dollars per acre. And so they're paying fundamental attention to what are their costs. They absolutely know what their costs are. Then that gives them an idea of what type of margin they need to go at. So top farmers, when they look at maximum yield, they're looking at maximum dollar yield per acre.